Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and welcome to Tuesday. I know it's got to be retrained. We were off Friday. We were off Monday. It is Tuesday, December 27th. I hope you all had the best Christmas holiday you possibly could have. Hopefully you weren't flying Southwest Airlines, because if that's the case, you're still not home yet. A lot of things going on. So first, let me just say this. The terrestrial radio at 1360, we are down right now. The winter storm that hit Colorado Thursday took power out. We got a bunch of other issues going on. We got our engineers at the transmitter site as we speak. We're hoping to be up with at least partial power. But you can always go to the stream. One of the great things that we've done, we've got that stream at 1360khmc.com that is always running, well, most of the time anyway, as long as the power's on, 24 hours a day, 7 days a week. So you can flip over there, but we are working on it. Dominic has said, you know what? These two guys are idiots. Joe and Jason don't know how to do anything. He has taken over last week, so it was last Thursday. It was our second YouTube performance with the video. I forgot to hit the record button. And then we decided to take the first hour of the half-empty cup that Jason and I do after Patriot, put that up there. Jason forgot to unmute his mic on the first segment, so Dominic's like, that's it. I'm taking all this over. So hopefully, listen, it's new to us. We'll get it. But we gave away some silver last week. The contest was guess what Jason's smoothie was. And we actually had two people that got it right now. We said the first person that guesses gets it. You know what? It's Christmas time. Both of you are going to win. Frank Kissel and Mr. Kongable. You guys are the winner. We're going to reach out to you through YouTube, and we'll get your address and all that stuff. And Jason, we gave away a couple free Silver Eagles.
Yeah, I talked to Dominic briefly. It was the Friday or Saturday. I can't remember. I think it was Friday. And we had, I think Kissel was the first one. And he nailed it. He said, wild blueberries. You know, that's exactly what's the main part of that smoothie is that Brooke makes me every morning. And then I didn't hear about the second winner, but I told us, like, hey, if anybody else chimes in, you know, because we give some people some time to do the new YouTube thing, we'll give away some more silver. So I guess two people. And he said there was 10 people on Thursday that actually chimed in, and only one, Kissel, was the only one to say wild blueberries. So you know, a lot of people had different ideas what I was drinking, Joe.
Well, we'll do a lot of fun stuff with that as we move forward. And man, I'll tell you what, I don't know what's happened with Southwest Airlines. 80% of their flights canceled today. Everybody else seems to be fine. My mom's flying out. My mom was here. My son, they made it here just fine. She's actually flying out today on a different airline. No problems there. Brittany had a tough time getting home with her granddaughter. She ended up saying, you know what? That's it. I'm done with this. Rented a car and drove back here. And probably a good thing she did, Jason. I'm hearing that people that are flying Southwest, if you're on those canceled flights, you may be there to the end of the week.
Oh, no.
Right?
Yeah, all I know is the weather finally got better here. Before the snow came in, we had 2 weeks of really bad cold weather, so it's actually warming up here. I mean, it's 32 degrees. We're at freezing at 9 in the morning, so this is a much better day for having this week. So I'm kind of baffled that everybody else is just frozen shut and they can't get home because our weather just got better.
Yeah, and it really kind of interesting. It was in the 70s here it was a stellar Christmas here in the Valley of the Sun. But it's one of those things where I don't know how these airlines operate and why one of them had all these problems and the rest didn't. But I'll say this. I know that like Buffalo, New York, they're the snow king capital of the world. When they're saying it's too much snow, it was a lot of snow out there. So I hope whatever happened, I hope you had a great holiday. Jason and I got a lot of great things planned for 2023 as all of the craziness that's playing out. We've got gold up 30 right now. Silver's up 35 cents. The Dow is mixed. We're waiting for this Santa rally. Hasn't materialized right now. The Dow is up about 80 points, but the S&P and NASDAQ are both lower as we had some trade data come in today. Not a ton of data, but we had some trade data come in today, Jason. Imports way down, just kind of signifying that that consumer demand is really slowing down. And they're saying that everyone's spending their money on services. I was talking to my mom, and my mom lives in Syracuse, and she was talking about, she's on one of those utility plans, that they offer. A lot of states offer these utility plans for senior citizens. And she was saying that her for power, a big jump in the monthly payment. And she was talking about how everybody it was so freezing cold there that the thermostats are going up, and that's what everyone's talking about in upstate New York is how big is the power bill going to be over the Christmas holiday.
I got the first electric bill over $200 just showed up in my mailbox. I don't even use it for heat, Joe. So there you go. It's going up.
There you go. Buckle up. It's going to be a wild ride. Jason and I, we're coming right back. (800-951-0592) and as that bullish sentiment in gold and silver continued, something that we've got to pay attention to, China reopening. I saw all through the holiday break. I was trying my best to decompress. Listen, I'm not gonna listen to a lot of news. I'm not gonna watch any news. I'm gonna try to stay off the computer as much as possible, but it's something I like to do. I've got a passion for it, so I'm always checking it out. And you saw all these articles, very similar to what they did here. The morgues are backing up and dead bodies everywhere. The hospitals are jam-packed, and talking about China. And then this morning, China's like, I don't know what they're talking about. By the way, we're getting rid of all the COVID restrictions, including China, one of the few places you still had to be vaxxed and boosted to fly into China. They took all that away today. And this is a big deal. We really have been lucky when we talk, we're talking about how expensive energy is going to be. We've really been lucky because of the fact that China has really been in some form of a lockdown during this whole Russia-Ukraine, that whole, the made-up war, as I like to call it. And Jason, China reopening, that could be as many as 2 or 3 million more barrels of crude oil a day being consumed. It's going to be really interesting. A lot of people, I don't know, but already today people are talking about oil back above $100 a barrel, could be as high as, we're back to what we were talking about the last time. Hey, $120, $130, $140 a barrel. But one of these other factors we've got to keep our eye on, because it looks very clear that at best the economy is slowing. Most of us are like, okay, how big is the recession going to be? And the Fed is going to really step off the accelerator when it comes to rate hikes. But if China, if it reopens, and China's got their own problems, but if this oil consumption comes roaring back, are we going to be in this situation where, like today, I saw gas here in Phoenix down below $3.30 a gallon, which, man, it's been a while since it's been that cheap.
It's a little cheap around here. We have a little bit of like a gas war going on in my local area, but yeah, you're right. The prices have been dropping, and the timing. It's always the timing, right, Joe? Why now? Why now? China opens right as winter just began, right? Right as it's getting cold across the northern part of the world. It seems like once again it's more of a timed recession, a timed event, Joe. It was interesting. We've been reporting how savings accounts are at all-time lows, or they're really low right now. People have nothing in savings. And then I watched a guy who was talking. Look, he was looking at new numbers. Like, well, it's a little weird because Joe, we've been seeing people. You've been reporting people filling up the restaurants, people going out and doing things. There's still people doing stuff, right? And so it's a little bit of a head scratch. Well, this guy's like, well, look, here's a number that is hard. It's hard to pin this number down. There's not a lot of metrics for it, but checking accounts have been very full up until about the Christmas shopping season. And what he showed was the checking accounts are now going down, right as Christmas, especially December, late November, December, the checking accounts are now going down. People just haven't been putting in savings, Joe. They just needed it at their disposal for shopping and basic needs. And now the checking account levels are finally going down. Those were very high, Joe. I don't look at checking account levels, but this guy was like, look, here, it's coming because the checking account, the savings accounts are down. Now the checking accounts are going down, Joe.
Yeah, it'll be interesting as we start to see some holiday numbers, what it looked like. But you really want a good example is when they talk about the flight cancellation at the airports, and you see people just everywhere, bodies everywhere. And the answer really is simple. If you can afford it, because the airlines weren't giving you anything. They're not saying, oh, it's weather, not our fault. We're not putting you up somewhere. If you could afford it, right, you got hotel rooms. And the funny thing was Brittany, she was at the airport. She got stuck in California flying on Southwest. And she was like, yeah, we got out of there. I took my granddaughter. We got out. I got a rent-a-car and I drove back to Phoenix. But she was talking about how many people, thousands of them, just laying down wherever they could. And the answer really is simple is, hey, this is all I can afford to do.
That's exactly it. There is no other answer, Joe. Why would you just lay in a
right? Otherwise, right? Yeah, you go spend the $200 or whatever it is to get a hotel room, or if it was close enough, you rent a car and drive. And Jay said it just couldn't happen.
Yeah, that's a very good indication of where people's finances are, Joe. And it's just like the fact I just put, we've talked about the savings accounts being low for a while now. So then I saw this thing on checking accounts. If you don't have money, you don't have money. And then if you're stuck at an airport, I mean, what do you do unless the hotels are being generous, right, Joe? That's you got nowhere to go.
Yeah, it's going to be really interesting. This is going to be, I think we're at this critical point now. What happens over the next, let's say, 45 days? What happens between now and, let's say, February 1st, that next rate hike? Are we going to see a pronounced slowdown? Because, let's face it, everybody, especially, Christmas is stressful. It really, really is. But everybody's, and I think a lot of Americans are like, okay, well, yep, I'm running out, but I'm going to spend what I've got, and I'm going to worry about it in January, right? I'm gonna buy the Christmas gifts. I'm gonna fly back home, even though I really can't afford it. I'm gonna spend what I've got. It's gonna be interesting to see how big the slowdown is. And again, remember, jobs. How many layoff announcements are we going to see roll in January? And again, it's not just layoffs. It's going to be no more overtime. It's going to be, I got my hours cut, right? All of these things now are going to have huge factors as to what happens going forward. And now, as you say, China reopens, and it's very interesting because this is cheap gas season. Winter time is always when gas is the cheapest. And it isn't, I don't think it's an accident that China all of a sudden is reopening now, right? And buying up all of that cheap oil out there. It's going to make for an interesting, really, I think February and into March, heading into spring, it's going to be very, very interesting how this economy looks.
Yeah, and as you were saying, Joe, the spending that's going on, just trying to get through Christmas, and then like me, I got my electric bill yesterday, the 26th. so here comes winter, and the higher energy costs are going to be more extreme. I mean, you think about it, the average person isn't thinking every single bill and then the timing of the bills, and you just get through that whole Christmas season, Joe, and then you get hit with these energy bills that are higher. I mean, I think a lot of people are going to be caught off guard.
Well, you know what's going to be interesting, and here's the problem. So these energy companies, they kind of know roughly, hey, we need X amount of natural gas for this particular week at this time of year. They always order extra, and it doesn't matter, natural gas, heating, oil, whatever it is. Hey, it's Christmas time. We're going to order extra, and they have a contract. They agree to pay a certain price. But then when you throw bad weather, and man, did we have it. And we had it outside of I want to say outside of California, Arizona, the whole rest of the country seemed to be freezing cold. And what happened for a lot of these people is, hey, the power companies had to go out into the open market and buy more heating oil, buy more natural gas, so the lights could stay on. And Jason, when that happens, without you knowing it, all of a sudden your already expensive power bill, you could have been paying double, triple, even some places quadruple the amount, even though your thermostat was set at the same temperature it had been at before it got super cold. A lot of people can be in for a pretty big surprise. In some places, you're almost better, I hate to say it, having the power go out than have it not go out and then have to pay the power bill.
Yeah, well, I mean, Joe, when my electric bill that came was over $200, I mean, not too many years ago, that was a car payment, right?
Yeah.
I mean, that's crazy, right? To think that if you possibly pay an energy bill that's over $200, you're paying what used to be a car payment. At least you were getting a car for that. I mean, energy, of course, we need the energy, but to have the energy costs going up, and you reporting China opening up should be a warning to everybody about how the energy costs are going to be going up very quickly.
Yeah, I anticipate that is exactly what's going to happen. I think this spring, already crude oil over 80 today. We're probably going to see the bottom here, I guess, wherever the bottom is in the next, say, week or so. That's probably going to be the low gas price. And then I think we're going to see a steady increase as we finish, get into winter and start heading into spring. And then what happens after that's going to be really interesting. How slow does our economy get? We're gonna have to have a slowdown, I guess, at least equivalent to a China reopening. And the problem is, China's such a huge country. They were having 200 and 300 million people shut down at a time out over there. I mean, that's the whole size of the United States. So it's hard to see energy prices or gas prices getting much lower from here.
Yeah, I mean, I don't think China has the same culture as we do in America, but I mean, I remember 2021 and especially earlier this year when everything was opened up and the coronavirus mandates were eased up, people went all over the place. They wanted to get out and just do stuff, Joe. So can you imagine if the Chinese people want to do anything close to that, right?
Yeah, exactly. And it's going to be, we'll have to wait and see. I actually think that things are going to be pretty difficult here, looking at the trade deficit numbers from today and seeing the huge collapse in imports just tells me that the consumer is spending money on bills. They're spending money on services, right? They're going out to the restaurant because the grocery store isn't any cheaper anymore. right? With food prices the way they are, they're out there. They're having to get their heaters fixed, or of course, maybe not their ACs this time of year. Getting ready for the Christmas holidays, the carpets cleaned and all that stuff. But it just seems to be light on stuff, which says to me that the retail sales numbers are probably going to be on the disappointing side. That'd be my guess.
Yeah, Joe, I don't know. We'll have to see. I know that kind of like I talked about a couple of weeks ago, I thought there'd be a lot of heavy shopping up to the last couple of days. There was tons of crazy shopping going on Friday, right before Christmas. So I think there was a lot of late spenders. So if the numbers considered average or okay, I wouldn't be surprised. But we'll just see, right, Joe? We'll see when they put those numbers out.
Yeah, we'll have to see. I think that's going to be very indicative, and we'll see how many retail layoffs do we see. That's the other thing that we will need to keep a hold of. Are people having trouble? Are retailers having trouble? Are we going to see a lot of store closures? Those are the things that we're going to be wanting to look for as we head in. We know tech's been bad. We know housing's been bad. Autos have been bad. If all of a sudden the retail jobs start to go away as well, it could be really an interesting setup and an interesting dilemma for the Fed for sure.
Well, we'll be watching, right, Joe? We'll be watching.
Patriot Radio News Hour. We'll be back after the break. Eight 800-951-0592, Patriot Radio News Hour on this Tuesday, short week. Remember, we are closed Friday and Monday again for the New Year's holiday. We're still working on our YouTube video. We had I don't know what happened to Jason. He just
I think you can hear me. You can hear me, right? You can hear me.
Yeah, I can hear you. Yeah, I can absolutely hear you. I just can't see you. It says memory card cannot play. So I don't know what that means, but I'm sure that Jason will reach out to Dominic and we'll get it working again. But here's a new one. And again, as we watch and as we wait, what's it going to look like? We know with COVID that the federal government and the state and local governments, especially in these blue states, got a ton of money that they use to plug shortfalls, whether it be in their daily budgets or weekly and monthly, yearly budgets, and also in their pension funds. Well, it didn't last very long. Chicago, and again, I think Illinois, a hotbed for these problems, faced a new shortfall. They're saying that a delay in property tax receipts. Now, this is what they're saying. And of course, what does that mean, right? Well, people don't have the money to pay their property tax. It's pretty simple. Is it any worse than it was? I don't know. My guess is maybe a little bit. But here's what they're saying is it left the pension system without enough money to pay its city retirees. And I don't know why, it's kind of interesting that the pension funds are getting money from property tax receipts, and again, usually you think property tax, you think schools, but nonetheless, that's what they're saying, that pensions were not going to be able to make the payments. They weren't going to have enough money in the bank. The Chicago Mayor Lightfoot loaned the pension $512 million. So think about this, $500 million. And that's not even going to get them through the first quarter of 2023. They're saying that will just be enough to make payments that for the rest of this year and the early part of 2023. It is the largest advance ever to a pension system. at a time when markets are headed for their worst annual return. And again, think about what's happening there, right? As these markets continue to struggle, and all of a sudden now these pension funds, they took a 20, 30, 40% haircut because I'm sure they were uber aggressive trying to get any returns possible. They're saying now there's not a lot of wiggle room. I'm not sure what happens next, but could you imagine now? So think about what they're talking about. This is cops, firefighters, laborers, other municipal employees, unfunded liabilities for the 4 big Chicago pension systems is $33.7 billion, more than twice the size of the city's annual budget, if you can believe that. So this is how big the shortfall is when it comes to Chicago. It's more than twice the annual budget. The pensions have enough assets to cover only about 25% of what they owe. I mean, we thought Social Security was bad. At least Social Security, they're like, well, they'll have 75%. The Chicago pensions will only have 25%. It looks like Jason, he's figured something out. So he's back in action here. They're saying that the average funding rate, so think about this, Chicago, one of the worst, they've only got 25%. And when we hit these downturns, this is when things really get ugly. This is when you see a lot of government debt popping out. But they're saying that the average ratio for U.S. states and local pensions is only at about 75%. Unfunded pensions obviously weigh on the city to pay for a bunch of other stuff. But Jason, you fixed the problem. But you know what? We went about 2 years without hearing about pensions because they took a lot of that COVID money and shored up those pension systems. And all of a sudden, right as we got a downturn, right as the markets are correcting, Chicago needed the largest loan ever just to be able to send people their checks at the end of the month.
Yeah, we were talking pensions a bunch in 2019. I remember that we were talking about the repo market, and we were talking about pensions all through 2019, and then COVID came through, and then everyone wasn't worried about the pensions anymore. We were worried about the other boogeyman, right, Joe? So it's funny, it didn't take long for that money to run out, did it?
Yo, man, and man, this is crazy. In the city of Chicago, 80% of the city's property tax goes to pensions. 80%. And Jason, they're not even close to being funded. I mean, they would have to. It sounds like they would have to like triple or quadruple the property tax just to have enough money to actually pay.
Yeah, they're supposed to be tightening, right? So there's going to be a lot of extra money floating around out there, and I don't know. I know they're floating around some new spending packages. Does that have anything to do with this, Joe? I know that they need more money. That's what it always comes down to: print more money, right?
Yeah, this 1.7 trillion. That's not going to help in this case. So this would have to be some other measures from Congress. We'll see. This is just the start. Why do I have the feeling that this is going to be another theme that we're going to see emerge in 2023 again as we talk about pensions? We know Illinois has been losing people. California has been losing people. New York, New Jersey. My guess is, Jason, all those problems come back. It's kind of like the same thing with the banks. They never fixed the problem. They just covered it up.
Well, I guess if there's a major recession that hits, they could always blame the recession, I guess, right, Joe? So they won't blame the problem that's been floating around for a couple of years here before our recession, because there was no recession in 2019 and the problem was there. But I guess, this could be the recession to end all that'll be pointed at for all the problems, right, Joe? They'll just, hey, it's the recession. Maybe we're really setting up for something big here, Joe, and they need to have someone to point the finger at, right?
Just going to say this. It's going to be a really, I think, a very chaotic year. Make sure you are protected. 800-951-0592. Jason and I are coming right back. 800-951-0592. Quick market update here. Gold's up, and that is the December contract. Pretty much December's over here. The February contract, 1830. By the way, that contract touched 1840 this morning. Remember, when we clear 1840, that 1840, 1850 level, look out. And I think it's going to do it much sooner than a lot of people thought earlier in the month of December, like early December. I think a lot of us were like, hey, it's going to be March. I think the big move is coming and coming a lot faster than we think. Silver's up 34 cents, 24.10. The Dow is still mixed. The Dow's up 150. The S&P is down a couple of points, 3 points. The NASDAQ's down 79. This market update brought to you by my friends at Y-Refi. Listen, it's going to be crazy. We know this. If you have $50,000 or more to invest and you don't want to be involved in the volatility of the stock market, why would you? You want a high fixed rate of return up to 10.25%. And I'm talking month after month. Doesn't matter what happens. Right? Big layoffs, no layoffs, great retail sales, crappy retail sales. The Fed stops raising rates, never stops raising them. It doesn't matter. It's guaranteed no matter what. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. 888-YREFI24. And just let them know that we sent you there. And Jason, I'm going to tell you right now, in hearing about the pension problems that are arising again, this is another, when we talk about, the pros and the cons, if you're making a list, right, that was one that kind of fell off the list, right? And now all of a sudden it's back in a big way. I mean, obviously, I would imagine the city of Chicago knew they had a problem a while ago. They just didn't want people to know about it.
Yeah, I don't think the problem went away. It just got a Band-Aid, I guess, right, Joe? I mean, that money just came in, and the blue states, so to speak, really used up that money the most. The red states seemed to use a little less of it, but it was just a Band-Aid. It was just, it's kind of like in someone's personal finances. You make a certain amount of money, but you're always spending more than you're bringing in because you're just not. It's not working. Hey, if Uncle gives you $10,000 to help you out for a gift or something, well, at some point you're still spending more than you're earning, and then you'll be back down to zero again. I think that's what happened with the Corona money. It's out, Joe. I mean, I don't think the pensions are going to get less.
They didn't fix the spending. Yeah, they didn't fix the spending.
No.
Right?
No,
I mean, let's face it, it's a pension. More and more people are retiring. The spending's getting worse, not better.
Yeah, I don't see the pensions getting better. I mean, I know some old folks died during coronavirus, but I'm guessing there was just more replacing them being retired, Joe, than were dying off. So I guess we're going to see how bad it's going to get, Joe, because I remember how severe it was in 2019, talking about especially like Chicago. I mean, it was severe, and then we were reporting different places across the country. We had these huge numbers of how close to default these pensions are going to be, how they can't pay with the money. And we how many times have we heard it, Joe, before? Then these pensions just go broke and they just don't pay.
And again, you got to remember too, these pensions heavily involved in Wall Street because they got big money. There's a lot of money in them, even though Chicago's pension is only 25% funded. That's a lot of money. And could we see a situation where all of a sudden, right as the market's tanking again, these pensions being forced to sell? Because that's what Chicago was like, man, we don't want to sell right now. And without the mayor loaning them $500 million, they were going to have a huge sell program going on. And I could see that man, you talk about a scary time is when you have, multiple pension funds, especially these big cities, these big blue states, if they're all forced to liquidate, that's when you see really scary days.
I remember watching The Big Short, and you have the original banker that came up with these ways to stack these products up, right? And then get them. I remember he's like, these are AAA rated. He's like, oh, this is what the pension fund in Michigan. This is exactly what we want. Remember that, Joe? give me 25 million or something, right? And that didn't work out too good.
No,
AAA rated,
no.
Joe.
So we just got first numbers out. MasterCard, not great. They're saying that the estimates were from November 1st to December 24th, about 7.6% higher, excluding autos. Obviously, inflation is about that number. So it does not appear that it's going to be a great retail season. They said apparel was up about 4%. Department stores, so I guess that's like your Macy's and Dillard's, was only up 1%. And then electronics down 5.3%. Jewelry was down 5.4%. So, Jason, it's early, but the first numbers I'm seeing, these are MasterCard numbers, kind of point to, I mean, it's not, I wouldn't call it a disaster, but not really good.
Yeah, so are these defaults?
No, these are
first part.
This is credit card spending from November 1st to Christmas Eve. So apparel up 4.4%, department stores up 1%, electronics and jewelry sales both down over 5%. Not a great start to the holiday reporting season. Patriot Radio News Hour, final segment coming up. 800-951-0592, Patriot Radio News Hour. Joe and Jason wrapping up this Tuesday. Going to be a short week. Just Wednesday and Thursday. We'll be off Friday and Monday. Right now, $20 gold, $2,085. We've had a $25 jump in gold. I did not change the price whatsoever. Let's take advantage of it. It's been a very good last part of the month here for both gold and silver, kind of just doing what it's supposed to do here. We anticipate a lot more softening in the economy. We also anticipate more softening from the Fed. We already got them from 75 to 50 basis points. It's going to be interesting to see. I think Jason and I both agree we'll get a rate hike in February. I still think we'll see one in March. I think it may end there, though, Jason. And I think that we're going to have a lot of dollar weakness in 2023, and we're going to have new record high gold prices. And I think silver is going to have maybe one of the best years it's had in quite some time.
Yeah, that sounds logical. That sounds reasonable. If the CPI numbers come down for January, the January number and the February number for the previous months, they'll rate hike in February, Joe, and I think that's it. I really think that's it, especially if things start moving like we think they're going to start moving. I'd say a quarter point in February, and then that's it. They're going to just shut that thing off and sit there and watch for 2023. See what the 2022 rate hikes actually do, because always those things they do, it always takes about a year to really get into the entire market. So, well, 2023 is going to be the answer to what 2022 actually was.
Interesting, right? Yeah. If you're right, and I'm not there yet, I still think they're going to do 50 basis points in February. If they only do 25, gold prices are going to be much higher. Either way, You can't, don't be late. Here's the thing, whether it's February or March, it really doesn't matter, right? You're talking about 6 weeks. Even if they tried to hold on to May, okay, 12 weeks. I think that the damage, the tone, the weakening, all of those things are going to be happening. And I think it's without a doubt better to be a little early than to be late, Jason, because I think we're going to see, and as we talked about, these really big moves. I mean, look at what silver's done. Silver's gained 25% in just the last, 7-8 weeks? I mean, it went from $18 to $24. I mean, and again, everybody out there will tell you $24 silver, that's way underpriced.
Yeah, we're gonna see some movement for sure. We're gonna see a lot of movement. It's been going up a little bit every year, Joe. It's been starting the year off a little better each year. The average numbers for gold and silver have gone up a little every year, and I think as we mentioned last week, there's going to be a big leg up in this 2023 year, and everything's lined up. It seems like they're really timing this big economic bomb to go off this year, doesn't it? This next year,
it looks that way. It does look that way. And again, I think the numbers out of MasterCard, it's early, but those weren't great numbers, especially when we know, hey, inflation's running at 7+%, and you're saying sales were only up 7%. Well, that kind of means they really weren't up at all. And then when you look at the actual retail side of it, right, the department stores, the apparel, the electronics, the jewelry, it just didn't happen. That to me says a lot of closures are coming. Patriot Radio News Hour. God bless everybody. Jason and I are coming right back with the Half Empty Cup.